Welcome to Her Money Revolution. I'm your host, Angela Brooks, your guide on this journey to becoming a wealthy woman. As a certified financial planner, owner, and advisor at Family Capital Management, I'm on a mission to simplify the conversation around investing and to help women generate more wealth by making their money work for them. Join me as we navigate powerful financial planning strategies to help you achieve your personal and professional goals. This podcast is your go-to destination for no fluff, easy to implement financial and investing advice. If you are ready to achieve audacious financial goals, dream beyond boundaries, and generate massive wealth for you and your family, this podcast is for you. Grab a notebook. Let's get started. Hello and welcome to Her Money Revolution, the podcast where we empower women to grow their wealth by making their money work for them. I'm your host, Angela Brooks, and today we are continuing our Investing Toolkit series with an important building block for investing knowledge, and that's called market capitalization. If you've ever heard of the terms like large cap or small cap, or wondered what they meant or why they even matter, this episode is for you. Understanding market capitalization, or also known as market cap, is crucial for evaluating companies and building a strong investment portfolio for yourself. I'm going to break it down and help you make smarter, more confident investment choices. If you're ready, I'm ready. Let's dive in. So what is market cap? Well, by definition, it is the value of a company that is traded on the stock market, calculated by multiplying the total number of shares by the present share price. Put another way, it is the total value of the company's outstanding shares. So it's essentially what the company is worth in the eyes of the stock market. Investors use this figure to determine the company's size instead of sales or total asset value. In an acquisition, for example, the market cap helps determine whether a takeover candidate represents a good value for the acquirer. The formula is pretty simple. So market cap equals the current share price times the total number of shares outstanding. So let me give you an example. If the company has 10 million shares and each share is priced at $50, the market cap is 10 million times 50, so $500 million. There's different types of market caps, right? So to help clarify the company's size, which gives you the insight into their growth potential and obviously their risk level as well. Now, I want to break it down the different types of market cap because it's really good to understand company sizes. So the first one is a large cap, so $10 billion or more. Large companies are the giants of the business world. They are typically boasting a market cap of, like I said, 10 billion or more. That means that the major players in the well-established industries and sectors, they're known for providing investors with steady growth in share value and regular dividend payments. Think of names like any of them that you know, right? Apple, Microsoft, Google, Alphabet. Those are all large cap companies. So put simply, they have a market cap of 10 billion or more. They're established, stable companies, Amazon, Apple, Johnson & Johnson even. They generally offer lower risk. Though their growth might be slower, they do offer lower risk, and they often pay consistent dividends, which we talked about what dividends were in the last episode. So be sure to listen to episode number 22 if you're concerned or wondering what dividends are. Large cap companies are often seen as a real safe and reliable investment choice. The next in this group is going to be mid-cap. Mid-cap is between 2 billion and 10 billion, okay? So these businesses fall between, again, 2 billion and 10 billion. They're typically in industries that are expected to grow quickly, or maybe these companies are in the process of expanding. However, this also could mean they carry a high level of risk, larger than the large cap companies that we just reviewed. An example of a mid-cap company is Eagle Materials. Maybe you've heard of them, maybe you haven't, right? They're mid-cap. The smaller they become, the less aware of these companies most people probably are. So in simpler terms, Mid-cap companies have a market cap between 2 billion and 10 billion. They're growing companies with the potential to eventually become large cap companies. They carry moderate levels of risk and reward. They're great for diversifying an investment portfolio. So mid-cap companies are often seen as a mix of growth potential and moderate risk. Next, you're going to have small caps. Let's talk about small caps. They are companies that's valued between 250 million and 2 billion. They often serve niche markets and emerging industries, which means that they're generally higher risk due to their size, due to their age, and the specific markets that they cater to. While their share price might be more volatile, they also offer a greater potential for growth compared to large cap companies. And if you just think that through, right, they're already large companies. Maybe there's a lot more growth potential, but there could not be, right? So the smaller you become, if you're a small cap company, there's more room for growth. So put in simple terms, small cap companies are like the rising stars of the market. They're smaller, often more agile, and can grow rapidly. They operate in specialized or emerging fields where there's a chance to make a big impact. The trade-off is higher risk. Because they're less established, their stock prices can swing more dramatically, and they typically do, right? This trade-off is known as the risk premium. Investors might choose a small cap to diversify their portfolios and to tap into potential higher growth, maybe even underappreciated or even overlooked companies, even if it means accepting more volatility. And then we're going to move into micro cap companies. These are even smaller firms than your small cap. They have a market value of between 50 million and 300 million. They are publicly traded companies, again, between 50 million and 300 million. They're smaller than the small cap and mid cap and large cap companies, but bigger than nano caps. I don't know if you've heard of nano caps, but they are smaller, or they're valued under 50 million. So micro caps are often seen as a very high risk investment because many of these companies have unproven products, little operating history, limited assets, possibly no sales or very limited amount of sales and operations. They're often more volatile, meaning that their stock prices will swing quickly. Also, these companies tend to have lower liquidity, which means that there are fewer buyers and sellers. This lack of liquidity can cause that stock price to have massive price swings. So put simply, micro cap stocks have market caps between 50 million and 300 million. Think of them as the little guys, right? With a lot of potential. They're small, but they can make some really big moves. Microcap stocks may see big price changes, especially because they are more volatile and they lack a large base of investors. They're small, they're micro. Not many people know about them. They're trying to make it big, right? They're more unpredictable, meaning you might see bigger gains. That's great. But you also are faced with a higher chance of bigger losses because these startup companies might go nowhere. It could be somebody's business in a garage that just stays there, doesn't grow past that, or maybe they don't even become successful at all. Despite the risk, during market periods, micro caps can outperform larger companies in terms of returns. So I went back and I wanted to justify this or verify that I'm correct when I say that. But so from 2011 to 2022, the Dow Jones Select Micro Cap Index had a 9.99% annualized return, which was almost as good as S&P's. During that same time, it was 11.13 in that same period, which is not bad, right? So investing in micro caps is like riding a roller coaster, maybe thrilling when the market is strong, but not for the faint of heart, because microcaps can be an exciting yet really risky part of your portfolio. So why does understanding market cap, why does it even matter? Well, it's more than just a number. It's another powerful tool for making informed investment decisions. And that's the whole goal of this podcast, is giving you the tools to make informed investment decisions. So understanding market cap, just put it in your toolbox. It isn't just another statistic or something that's out there. It's something that you should understand. It's a key measure that helps assess a company's true performance. It sets the foundation for analyzing all other financial metrics. Like, so for example, if one company generates twice the revenue of its competitors, but has a market cap that's 4 times larger, that discrepancy could suggest it's not living up to its full potential. It gives us more information to understand, right? Essentially, the market cap puts a company's performance into perspective. It puts more narrative around what's going on in that company. It helps investors spot when a firm might be underperforming relative to its size, or when they're overperforming and they're doing great, again, relative to its size. So put in more simple terms, understanding market cap is important because you have a risk assessment. Smaller companies can grow faster, but are riskier. Large companies are more stable, but may have slower growth. Growth potential, market cap, helps you identify companies with room to expand. Portfolio diversification, investing across different market caps will balance your risk and reward. And I am all about diversification. I have clients that ask, what do you think about crypto? What do you think about gold? What do you think about big cap, small cap, large cap? Yeah, I like it all. You might as well go ahead and diversify. Each of those have a different value that it will bring your portfolio. And the best thing you can have is diversification. What are some misconceptions about market caps? Okay, so let's clear up some confusion around market capitalization. While market cap is a useful way to describe a company's size, remember that's what we're doing, it's not the same as measuring the company's equity value. To truly understand a company's worth, we need to dive into more of its fundamentals, things like revenue, profits, assets, liabilities, and so on. Market cap helps that narrative, but it doesn't identify the company's worth in totality. The market cap reflects what investors are willing to pay for the company's shares, but it doesn't tell us the full story. It doesn't account for whether the company's stock is overvalued or undervalued. Additionally, when it comes to like mergers and acquisitions, the market cap doesn't necessarily determine how much a company would cost to acquire. In those cases, a more accurate measure is to look at the enterprise value, which is another term. It takes other factors into account when putting a value or worth on a company. So market cap tells you the company's size. Another common mistake that many new investors make is assuming that a higher stock price automatically means that a company is bigger. This is just simply not true. Sometimes it is, but that is not a rule of thumb. Most of the time, it's not true. So, for example, company A has 1 million shares. Each of those shares are priced at $500 each. So the market cap for company A is $500 million. Company B, in this example, has 10 million shares and it's priced at $50 each. So the market cap is what? Correct. The same, 500 million. Okay. Both companies have the same market cap. Even though company A's stock price is much bigger, 500 compared to the $50, both companies are valued equally in the market. So don't get confused. Market cap and stock price aren't the same thing. It's the market cap that gives a clearer picture of the company's size. Okay, so you understand it. I think I've drilled it in enough. So why does it matter? How can I use market cap to build your portfolio? Maybe you're asking yourself that. So let me give you a guide for your investment strategy. Here are a few different approaches when you think through market cap and how you can use it to build out your portfolio. Again, diversification strategy. You want to combine large caps for stability. You want to have mid caps for growth and small caps for potential higher returns. Understanding risk management. If you're more conservative, you're going to lean towards large to mid caps. If you're comfortable with risk, and you're going to lean towards small and maybe even micro caps if you are real comfortable with some risk. Another point when you're building out your portfolio and using market cap is the sector investing. So different sectors like tech and healthcare, utilities, different sectors can have different market cap leaders. Okay. Again, this is just one more tool for your toolkit. So how do I use market cap in my own personal investment strategy? I always look at market cap alongside other metrics. It's just one data point that I use. I look at large caps. They anchor my portfolio with stability. I have mid and small caps. They give me room for growth. And remember, it's not about chasing the biggest companies. It's about finding the right balance that are going to be in line with your specific goals. That's all I have for today and of Her Money Revolution. I hope you feel more confident using market cap to evaluate companies and build your investment toolkit. If you enjoyed this episode, please subscribe, share it with a friend, and leave me a review. Your support helps us reach more women on their journey to wealth and financial empowerment, which is my goal and my mission for this podcast. Until next time, believe in your power to build wealth and bless others with your knowledge. Thank you for joining me today, and I hope you are feeling more empowered in your financial journey. Remember, follow and subscribe to Her Money Revolution on your favorite podcast platform, and share your feedback by leaving a review. I'd love to hear your biggest takeaway from today's episode. Until next time, stay inspired.